Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, is capitalism changing right in front of us thanks to the Trump administration? And trade talks continue. What are the best and worst case scenarios for Canada? Plus, extreme weather is extremely costly. That's all ahead. First, for the week that was in business, it's time for the briefs. Inflation in the U.S. rose by 2.7% in July, matching levels in June, while the core rate edged higher to 3.1%. Both numbers are outside the U.S. Central Bank's target of 2%, but markets were relieved to see little sign of price pressures from tariffs. The trade tiff with China continued as Beijing raised tariffs on Canadian canola imports to 75.8% this week after it accused Canada of dumping the seed into the market. The trade dispute began last year after Canada imposed a 100% import duty on Chinese electric vehicles. Wildfires continue to burn across Canada this week as the summer tracks to be the second worst on record for hectares burnt. Manitoba and Saskatchewan count for more than half of the area burned so far, but BC, Alberta, and Ontario are also above their 25-year averages, and the Atlantic provinces continue to battle out-of-control blazes. Canadians continue to shun U.S. travel. StatsCan reported the number of residents who drove to the U.S. in July was down 37% compared to last year, while air travelers fell off by 26%. Meanwhile, Americans headed north in lesser numbers by car to the tune of 7%, but visits by air were basically level with a year ago. Air Canada began canceling flights this week in the face of a possible strike by its flight attendants this weekend that could see more than 10,000 flight attendants walk off the job. Air Canada said 130,000 customers a day could be disrupted in the dispute over wages and unpaid hours. Gildan Activewear is offering $2.2 billion to acquire Hanes brands. Hanes is struggling with higher tariff-related costs and a stock price that has tanked since January, while Gildan's share price is trading close to all-time highs. A bid for Hanes was at the center of a boardroom battle at Gildan that saw the brief ousting of its CEO in 2023. And those are your business briefs. This week, the Trump administration said that while it will allow two key chip makers to sell to China after all, it will only do so if it gets a piece of the action. It's just the latest cash grab that CEOs have submitted to, likely not the last. Stuart Trew is Director of Trade Investment Research at the Canadian Centre for Policy Alternatives. Stuart, thanks for being with us.
Hi, Amanda.
So the concern here, of course, is that what we would understand as the rules of how capitalist systems work are being upended. Where does it leave us when we can't really count on the U.S. to play sort of the stable role that we've seen for hundreds of years?
Yeah, you're right. None of the rules seem to matter anymore. The rules that were, let's be honest, set over the past 40 years by the United States, if we're looking at trade rules in particular, they have a tendency to do this. I mean, in a sense, it's not unusual for the United States to all of a sudden pick up and change everything in order to benefit itself and its companies. We've seen this a number of times, like with Nixon in the 70s, for example. But yeah, it's very hard to operate for Canada to think through what is our relationship to this government south of us? What should we be preoccupied with? I mean, in a sense, we can't really do much about it. This is the new reality. We have to work with it. We can't really get too worried about, fretting about it. We have to kind of worry about get our own ship in order, I suppose, would be one way to look at it. So, yeah, hard to know where this is going to go. If the chip deal really is a new precedent, or if it's just another of many ways that Trump just does whatever comes to mind at any given moment, and there's no coherence. It's really hard to know.
And there are many different examples of that. The other one that happened recently that in some ways, Stuart, I guess the thing that I'm perplexed by is why this stuff isn't rattling markets more. And that would be, of course, the firing of the chief statistician at the Bureau of Labor Statistics and essentially saying, this data doesn't matter. It matters enormously, or it has historically, to the bond market, to currency markets. Any change in that data could send ripples around the globe. Now we're being assured from the White House that none of it matters. And yet markets are kind of sanguine about it. What do you make of that?
I think, and this might be a cynical take, I'm not sure, but I do think that overall, a lot of companies and markets and investors see that Trump's on their side, right? He's their guy. He just introduced a budget bill, which has seen one of the greatest shifts of income in the United States from the poor to the rich that we've seen in a long time. Trump seems to be out there to make U.S. companies a lot of money, right? Corporate tax is going down. And so they're willing to give him a pass on some of the things he's doing, right? In the long run, profits are going to shoot through the roof, especially with the tax burden being lowered to the extent it has in this bill. So, they're in there for the ride. They're going to make some money. And I think that's why we haven't seen the markets reacting as much as they did when he first announced those tariffs back in April. We did see a big reaction there, right? If you recall.
Yes.
And so since then, Trump's been, I think, testing the water here and there. What can I get away with this? I mean, that's what it feels like sometimes. This NVIDIA deal as well. It's probably illegal, right? I mean, taxation of companies is a matter for Congress. So whether or not this NVIDIA 15% deal actually survives is an open question. But again, it's just an example to me of Trump testing the waters. Is everyone still on board? The markets didn't budge very much. Okay, let's keep going. And I think we're just going to keep seeing this over and over again.
And as you know, Canada has its own issues, and we have a house to keep in order ourselves. Is there a concern that there's a slow creep of bad behavior, that when, as much as we don't behave that way, we still adhere to the rule of law here, but when we see the rules of international trade or commerce being upended, that there is sort of the fear that we will also start to blur some lines as time goes on?
Yeah, I'm a little worried about that too. I mean, when we think about, they're calling it in the States, this kind of pay-to-play economy, like if you flatter Trump enough or give him a nice gold watch or something, you're going to get your way on policy. I don't think we're anywhere near that yet in Canada. I do think there are elements of that, though, in this infrastructure bill, the Building Canada bill that the federal government has announced in terms of, well, what are the criteria for what kinds of projects are in the national interest? And these were raised at the time when it was being passed earlier this year, and I think they're going to come up again as the projects start to be announced by the government. Again, I don't think we're there yet, though. I think we are kind of sticklers in Canada for the rules. And I think that there are ways to work around Trump, right? Trump is a powerful country. The United States is a powerful country, I should say. There's a lot of desire on the part of Canada's other trading partners to think through this moment as well. Non-traditional trading partners as well. The Global South obviously has a huge interest in some kind of stability outside of the U.S. market, if that's closing off to them. So I think that, that's an area where Canada can have a role internationally, is working around this chaos in the United States,
right.
But also figuring out how we're going to build our own economy out, right, in ways that are maybe less dependent on access to the U.S. market, less dependent on those exports.
Stuart, so good to have you for this. Appreciate your time.
Thanks very much.
Stuart Trew, Director of Trade and Investment Research at the Canadian Centre for Policy Alternatives. Coming up, extreme weather comes at extreme cost. Stay with us.